Aloha, everybody. We have started off the year on kind of a rough note, but overall, it's not that bad. The Russell 2000, we've added to, as we said, the Russell 2000 has been following this uptrend line, which you can barely see here thanks to all the reds and everything else. Maybe I can clean this up a little bit. Let me get rid of the 50-day moving average for a minute and the 200-day moving average on this index. Maybe that will make it a little bit more clear to everyone. So as you can see here, the Russell 2000 basically since the November lows in 2012 has pretty much followed this uptrend line pretty much to a T. Sometimes it gets outside of it, and whenever it does normally fall back into the upper range. And as you can see, we're kind of confluencing on each other, so I need to kind of like readjust these lines. But you can see that we hit the top of the range on the 24th. We finally had a confirmation of the move down on the 27th with a down day. We initiated a small short position in Russell 2000, hedging all of our longs. And as you can see, the selling has remained since then, but it hasn't been that ugly. Since we hit that top to now, we're only down 1.33%, yet I got people calling this a major pullback and people really saying that, after 2013, 2014 is going to be an ugly year. I don't know what kind of crystal ball these guys have, but until I see more selling on heavier volume, I'm not going to get too worried. The NASDAQ actually was down quite a bit today, down 0.44%. Volume was well above average. However, there was, a lift off the intraday lows at one point intraday. Let me go here and then to this. And as you can see, we did rally back and then sell back off in the final hour. However, we did close above the lows. So it wasn't ugly, but it wasn't great. The big pickup in volume has to be watched. You don't like to see that. However, we're still above the 50-day moving average. So how do you get that bearish? On all of these indexes, we're still above the 50-day moving average. You can't call a top until we start to see some real distribution, lower highs, lower lows. We start to see that with some distribution, then we can start top calling. Until then, it's just too early. And on top of that, we had a lot of nice movers. I mean, look at our market today. HTH, nice breakout on heavy volume. Voya, nice breakout on heavy volume. Packer, nice breakout on heavy volume. SVA, you can see the move there. ETAK, you can see a breakout there. Deckers, you can see a breakout there. MTRX, you can see a breakout there. Zillow off the 50-day. Yelp adding to its 50-day breakout. MCHX, continuing with the breakout. FRM breakout. ALGN breakout. JKS hitting new highs. Quality system, Qualis, whatever. Following through on its breakout the day before. So, and look at coffee off the lows. So there's a lot of bullish price action out there. TMUS, Pandora. So it's hard to be saying that the market's going to sell off. It's just too early. It's just too early. So hedging is what I will continue to do as we move down. Our recent long this past weekend, Taro, it did not hit my limit. My limit is at the $100 area. I'm going to keep that limit on the books until it hits the $100 area. If the price breaks out and moves above 105, 110, obviously I'm done with Taro and I will move on to another one. It's thin anyway, so it's not a big deal, but as you can see, the accumulation and steady uptrend has been quite impressive throughout 2013, and I don't see, if 2014 continues to be replay 2013, why that wouldn't continue to happen. So that remains on the book, but SRTY, whatever remaining account capital I have, that's all going into SRTY. I think I have just slightly over 1% of account capital. It's all going into SRTY, so we'll be adding to that position, giving me, I'm not sure how much that's going to be. I don't know. I think then that's only going to give me about a total of 2% position in that thing, I guess. Wow. We've been dealing with very little cash on hand. However, we're going to raise some more of it. EIG, a third close below the 50-day moving average on heavier volume. As you can see, each day volume picks up. Each day, BOP gets weaker. And I tell you what, that kind of poor relative strength line, that white line at the bottom versus this overall market, I'm done with EIG. I'm going to go ahead and get out of it. USCR is closing below the 50-day moving average. It hasn't done this yet on heavy volume, or it has done it before, but it hasn't done it in a very long time. 1, 2, 3, 4, 5, 6, 7 plus months. Finally, it closed below the 50-day moving average on above average volume. That is a 25% sell. BEAV doing the same thing, hasn't done this in a very long time, closing below the 50-day moving average on above average volume, with BOP even going negative. That too is a 25% sell. Two disappointing drug-related stocks, ABBV, after a very nice breakout, an immediate follow-through, multiple follow-through, pocket pivot point, and positive price action, breaking down below the 20-day moving average, erasing almost all of our gains on very heavy volume, BOP going negative. That is a 50% sell. It would be a 100% sell if it closed below the 50-day moving average with that price or volume surge, excuse me. And then VRX, the same thing. Ugly sell-off after a very nice follow-through and confirmation follow-through, pocket pivot point signal on the 30th. However, it's erasing that, closing below 20-day moving average on very ugly volume with BOP going red. That is also a 50% sell. But overall, the trend is still up. We're under a buy mode in every index. Don't overthink this market until we close below the 50-day moving average on heavy volume and then get some kind of confirmation sell below that 50-day moving average break. I wouldn't be so quick to top call. I can't believe some of the stuff I've seen on Facebook and StockTwits lately. Even though everybody says that everybody's bullish this market, if you're reading what I'm reading, that is not true at all. I've got top callers and broadening formations and everybody worried about an ugly 2014 everywhere. We'll see who's right. Right now, they are.